Yeah, I'm losing
Today,
my
Pete, we're talking
edge.
about a small, simple gold-silver pair. Um, and this might seem like something that's very niche, pairs trading gold and silver. But I mean, Pete, in my 4 years, 5 years of producing content, um, this is something that resonates with a lot of people,
Mhm.
especially when you talk about asset classes and big kind of worlds within the universe of trading. Stocks is A1, for a lot of people. And the pairs within that, actually, a lot of people kind of understand, S&P to NASDAQ, small stock 75 to Russell or S&Ps or anything like that. This is just as simple as that. Once you get into the world of metals, gold and silver are the big dogs. And those are
Yep.
the two that a lot of people love trading against each other. Of course, there's always going to be more interest just because it is the simplest trade within an asset class like metals in gold individually or silver individually or the small precious metals individually. But when you start to look at playing these off of each other, creating a new trade that a lot of times is uncorrelated to that asset class itself, it gets a lot of people interested. But the only thing, Pete, traditionally this is kind of a hard trade to set up. It's clunky. You've got two different markets here in gold and silver where their traditional futures aren't near the same size notionally. Different things can move them from time to time, and it's also when you put them together, you get the ratio right. You're starting to feel comfortable. It's also really big a lot of times, and so today I wanted to talk about diving into the precious metals market, using small precious metals futures to get a smaller, simpler take on gold silver because it's crept up here to be an interesting trade as metals in general are at their
Yeah,
highs.
absolutely. This is, I mean, precious metals are really an interesting trade back in vogue. So, and as you mentioned, we made a new lifetime high in the index yesterday. So there's a lot to do here, a lot of back and forth, a lot of the push and pull of the metals within one another creates some interesting tradable opportunities. And that's part of the reason why we went out and constructed product that would
Yeah.
resonate with an active trader.
No, you nailed it there, Pete. And while this, I think yesterday was maybe the 15th new all-time high for metals on the year, and you would say, well, okay, it's just like NASDAQ then,
Right.
it's just like the stock market. It just moves in one direction. How am I supposed to trade that? But the small precious metals futures here, they bundle up that gold and silver exposure with a little flavor of platinum in there as well, which has caused for, new highs here. And then a lot of these new highs, especially in this range, these 1, 2, 3, 4 new highs, pullbacks immediately after that, the following day. And usually it's the metals kind of trading hands. And which is to say, if you sold gold on any of these new highs, most of them gold continued to stay flat there or continue a little bit further. But what tugged these futures lower and created that two-sidedness that Pete is talking about was that push and pull from silver and gold. But what's been
Right.
interesting is that this new high arrived on the back of silver more than gold. Silver yesterday up over 3%,
Right.
and gold only up, I think, a percentage point. And so
If
this
that, yeah,
a
yeah.
little changing of the guard here, right, Pete?
Yeah, absolutely. So, and this is, we always talk about selection dilemma. Um, its own interesting trade, sure. Sometimes a little bit more challenging. It's absolutely, you're going down because we've talked about gold silver ratio trades, and you're going down a multi-step process. And, for some of us, those are good steps to take. For a lot of us, it just gets really tough. And once you can even wrap your mind around it, it's like, okay, now it starts moving. What am I hoping for?
Yeah.
And how, it's so funny when you look at a pair trade and figure out what am I hoping for, and you're not clear of concept, then you've kind of gotten too far over your skis in terms of understanding mechanics. But there's one thing of trade setup mechanics, and that's building the ratios and
Yeah.
constructing the execution. But really what's important is the idea. What is my idea, and are these the right products to express it?
Yeah. And hopefully we can cover both of those bases here today. Because, yeah, Pete, historically, you and I have done a lot of that ratio work. okay, it's going to take this many silver contracts and this many gold contracts. And I mean, that's just to set it up. You have to figure out what you're buying and selling. And then, like you said, you have to figure out what do I want to happen here? What's the idea here? Because you can see all these three markets trending higher on the year. They all three had this, sell off in mid March, but all three trending higher. What's interesting to me is you've got this silver underperforming, the silver and blue underperforming gold throughout most of this. And just recently, just yesterday, I would say, is honestly a pretty big, for me in my mind, looking at the relationship between gold and silver, inflection point where you started to see silver outperform
Yep.
gold. And it's the first time in, I mean, Pete, I would say a decade, the first time that you've seen silver finally make up a little ground on gold. Because you look at this chart and you look at back in the 90s and early 2000s trading on top of each other. Gold is in this 250 to 500 range, silver's in this $5 to $10 range, and then they both take off here amid the 2008 financial crisis. Pete, what you see there though at these highs, gold is at those highs currently of 2010 2011, and silver, Pete, got as
Right.
high as $50 at that
It was
point.
under it. Yeah.
Gold back to those highs of 1800. Silver, I mean, you thought it was a big move to get to $20. It's half of where, not even half of where it was at
Right.
those gold highs. And that's what when I say, this is the first time in a decade it feels like silver is making up a little ground on gold. It really feels like it, doesn't it?
And you're right, and just starting to, and I'm not suggesting that tip of the iceberg here, but it's funny. We when you look at silver in a vacuum, you think, wow, they're back to $20. That's an interesting level
Exactly.
to sell. And the premium's so rich. I can go out to those $22, 22 and a half. Look what I'm collecting. Okay. Nothing in life is free except our friendship that I get. Well, it actually costs me, but it's free for you.
Yeah, I was going to say you have to pay, I think.
Yes. But there's a reason why that call premium, that premium in general in silver exists, is its propensity to do exactly what you're talking about here. So a change in leadership, yes, we've seen that take place over the last 3 or 4 days. In terms of back and forth, sure. But we see the bounding that can take place when leadership readjusts. And I think that creates for that. This is oftentimes I don't like going back 30 years on a chart because it's the takeaway from then and now is too radically different. This is a great piece though, in terms of putting some context around that.
Well, and I think that this is apt when you talk about, commodity markets to me are a lot more, I don't want to say mean reverting, but their prices over years and years tend to look a lot similar because you've got inflation and some other things affecting stocks in a different way that causes them to drift higher. Here in gold and silver and markets like crude oil, you tend to see over decades a lot of the same price points. Now, you'd go back to prior to 2005 and you'd say, all right, well, we haven't seen gold or silver in this range down here and, $300 in gold or anything like that. But, it's nice to go back a full decade and say, hey, gold was exactly where it was.
Right.
And silver, and these are two commodity markets. It's not like the constituents of these markets changed. It's literally gold and frickin' silver.
Right.
And silver is less than half of where gold was at that same time. And, I want to look at something in particular because you and I have done research on this in the past. And the last time, and it doesn't really look like a high right now because we're still above that. This is the gold over silver ratio, just monitoring how expensive gold is relative to silver. As you can see, coming off of that peak, and of course, this would have been the best time to get short gold and long silver, but still above what would have been all-time highs in this spread going back to the early 90s. Now, I want to look at this case right here, Pete, because this right here from 2008 to 2012 is probably the most volatile time for this and probably some of the best opportunity for trading this spread back and forth. You saw this peak here in gold over silver, and it's going to coincide with this right here. And you'd say to yourself, well, wow, gold it's not like super expensive. It's at $1,000. It's at 1,800 right now. And it got as high as 1,800 when this spread moved back down to the lows for this whole historical data set. This is to show you that this gold and silver ratio actually converged. Gold came down in price relative to silver,
Right.
not because of bearish activity. It actually came down because silver came up to meet gold. And we've seen this in the past. I forget which, I mean, it must have been a
Traditionally,
show 2 years
traditionally,
ago.
that's the way the ratio converges. We haven't seen that necessarily take place this time. So
Yeah, well, and that's the thing is that more often than not, historically, when you saw gold and silver come off of these high levels, it was like we saw in 2008 to 2012, where it was amid rallying in metals, but
right.
it was just silver picked up, and I think that that's what Of course, anything can change. Metals in general can fall 10% tomorrow on the whole, but what we've started to see here is silver making up ground on gold
Right.
as precious metals in general move higher, and it's
Hmm.
it's something that I like to see in this chart and this chart here. Of course, like I said, you would have loved to sell gold and buy silver a month or two ago. That's when it really turned off of these highs. But I mean, this was a march just straight through all of
Yeah.
those. And you and I looked at this throughout 2016, 17,
The
18, and last
70,
year,
you're
and
right,
we got
Frankie.
run
Yeah.
over a lot.
Yeah, and the 78 to 80s, historically, last 10 years, the average was 58 here, 58 ounces of silver to buy 1 ounce of gold. So the 78s, the 80s, the 82s were really interesting. Um,
And so we're still back at 90,
right. Yeah. So we're still at, yeah, we've had a pullback, but still, we're at the upper, 10th percentile of where this spread is able to trade. So I think that's the interesting opportunity. So we've had a little bit of back and forth here, and that new high put in. I didn't honestly. Last time I looked at it, it was 115. I didn't even see the 120 print because I think that's where everything was kind of coming apart. I was looking at some other stuff, but
Yeah, I think that was probably that quick move right here,
right,
where you see everything selling off in metals, but silver got absolutely slammed down
crushed.
to
Yeah,
$12, and that's probably where you saw that quick blip. So I
right.
mean, it's something that most people, I mean, even you and I who look at metals every day, missed a little bit, but it is nice. You and I talked about this earlier today. When you see a market like silver finally wake up, even though you're not necessarily getting the cheapest prices or the most expensive prices for gold over silver, it's nice to finally feel a little confident in the
Yeah,
two-sidedness of
right.
these markets. And so, okay, so how do we go to practice with this? I wanted to show some ratios of
Good.
small precious metals to gold and silver for a couple of reasons. Because one, yes, you could go to this and look to trade SPRE against these big contracts in GC and SI, and those smaller contracts in MGC and SIL. The thing, though, that you'll notice before even getting to an application of this trade is, man, it's going to take 30 SPREs to trade GC. Now, of course, you'd maybe say to yourself, all right, well, then why don't I just trade, if it's 30 to 1 in GC and 15 to 1 in SI, why don't I just trade two SIs to one GC? Well, understand that before you set up that trade, SPRE moves about $100 a day. So if I'm going to trade something in GC that moves 30 times that, that's a huge daily move. And so, of course, you could, in one contract here in GC and two contracts of SI, you could build a gold silver trade right there. But Pete, that's a spread that's moving hundreds, if not thousands of dollars on a daily basis. I mean, today, with the reversion, silver actually backed off those highs and actually a better position to get long silver and short gold. Today, Pete, it's about $1,000 move in this spread when you're looking at those big contracts, right?
Yeah, absolutely. And you know what? The other thing too is huge move, and the amount you look at that 2 to 1. There is no margin offset, so constructing these pairs becomes incredibly challenging in terms of capital use. This is a big trade to build.
What would be a ballpark for two silver contracts to one gold?
I've got to say that, and I'm actually taking a peek now, so I don't mean to cheat, but and that isn't right because I got other stuff on. Shoot. I've got to imagine it's probably $14,000 because the silver pieces are going to be more expensive.
And right now, margin in selling or buying SPRE is a couple of $100,
Right.
right? And so what this comes down to is, okay, I can make something smaller. If I wanted to get long silver and offset it with some short gold
Right.
exposure, I think a great way to get smaller is selling 3 SPREs against one/SIL. But even that, Pete, is still a pretty big trade, especially
Right.
if you're trying to hold it for a couple of weeks, get something mean reverting. What's even nicer and gets you something that's higher probability of profit, because now we're going to look at some options, and gets you to the smallest it could possibly be, is selling an SPRE contract, a single one, and then looking at a put spread with this 15-to-1 ratio here in SI. If I'm looking
Yeah.
at SI options and I'm looking at, okay, if I want to get long silver against SPRE, the smallest way to get short precious metals, and keep in mind that SPRE is about 50 to 60% gold, so it is overweight gold. So you've almost already there got your gold silver
Right.
trade exactly. I can get short one SPRE contract. That's $400, $500, and then I could sell the put spread in SI. The delta that you would need to equate that is about 6 or 7 deltas via this 15-to-1 ratio of SPRE contracts to SI contracts. And so that's something that to me is really attractive, is selling the SPRE contract, a
Right.
single one of them, and then selling a put spread that's about 5 to 10 deltas in SI. It's a spread, so I don't have to worry about the risk of getting a full silver contract if everything moves lower.
Right.
And I've got the hedge on with the short SPRE. That to me is as small as you can get and as simple
Right.
as you can get as well here, because otherwise the smallest that you can get with the outrights, Pete, is 3 SPREs against 1 SIL, which, hey, that's pretty freaking good to go from, what was it, about 10,000, north of 10,000, down
Right.
to a trade that's probably like 2,000 or 3,000.
I'd say about 2,800. Yeah, $2,600. Right. So,
But you can use those options to get. What do you think about something like that, Pete? That's an interesting
I
trade.
think that's an incredibly interesting trade because you actually taken out almost. I mean, this is the visual here is great because that does the math for you. And you know what, guys, this is not something that's going to change like SI to street. It's not going to go to 12-to-1 in a couple of days or a couple of weeks. So
Sure.
these are great ratios to do. I love the idea of the simplest. Okay, how can I construct a gold silver ratio, which we showed, an interesting trade, but a trade with its challenge. It's either very expensive. I got to do some math, and then I'm figuring it out. And just what we talk about, what am I expecting in terms of the different tick sizes and everything? It's you will find that you will either look at your P&L or look at the percentage change, because trying to do the math on the movements themselves is next to impossible. So if I can add a simple future and then add the put, which I know exactly where it's defined risk on, I've got the simplest form of taking the smallest precious metals index and taking out what I feel is the divergent part and possibly the part that's going to catch up, and putting that into play. So I think by far, you look at, here's 4 products you can choose from. You can construct the same trade with each one. You wrestle with some of the complexity around it. By far, this is the easiest way. And I got to tell you, so I would think the question would be, well, just do this with a GC call spread and a silver put spread. From experience, that just doesn't work.
Well,
you don't end up with the trade you want.
I'm glad that you brought that up, because that's where that convoluted, because you could say to yourself, well, I'm an advanced options trader. I know that I can go in to GC call spreads and SI put spreads, and I can put on this tight spread that's maybe going to be a buying power. At its tightest, probably you get away with a couple $100 in buying power. Here's the problem, is that when metals, as they have been, as we go back to this chart, just precious metals in general, if they move higher or they move lower significantly, you're going to be long either silver or gold, and you're going to have no hedge on the other end of it. And even if they move around a little bit, you might see that say they move lower a little bit and a week goes by and you've got no premium in that call spread, but you've got all your delta left in that silver put spread. Now I'm just long silver. I've got no hedge against it. Using the futures on one side and getting as small as you can with just that one SPRE
Right.
contract that's going to cost a couple of $100 to get on, and then modifying that one small contract with a small options trade in the SI put spread world. I mean, Pete, that to me is the smallest, simplest way to get the gold silver pair on.